Hey family, how are you doing today? This is Dr. Financial Literacy with day 11 of my journey in getting a HELOC, HE loan, or all-in-one mortgage. I'm glad you're able to join me. Please hit the subscribe button or continue to follow me. And if you have any comments, please leave comments so that I can make some improvements on the videos. Today, again, I am a political economist. I am not a financial advisor. I'm not a lawyer. I'm not a financial planner or CPA. I am a political economist. And being a political economist, I simply look at the interactions between the government and the economy and then try to make appropriate decisions. Today in episode 11, we're going to look at, I got some news from one of my vendors in general, lenders, that talked about the HELOC that could be available to me. One of the things that they pointed out today was that my name is not on the lease where I'm currently at or on any utilities. All the information is in my wife's name so that we can have some flexibility if home become available. With that in mind, they're wanting to see my name on a lease in general, which would bring down or take up my utilization of my debt to income ratio. So I'm still trying to understand that. They're willing to give me a 30-year fixed mortgage 5.7% at $175,000, and I end up paying back about $300,000 to $400,000. But they are having a hard time giving me a $50,000 HELOC over 20 to 30 years. And again, the HELOC allows you to pay down some debt, and it also could allow you to use the strategy. So as a major bank, a major lending institution, they may be definitely aware of that. By getting a 30-year fix, which I'm getting away from, I'm never going to take on another 30-year fix. I think I'm either going to use a HELOC, HE loan, or all-in-one mortgage to reduce interest in general. So with that in mind, again, the lender indicated that I need to have my name on a lease, and I may not do that and continue to pursue with that particular lender. Also in today's episode, what we're going to look at is an aspect of my business and the resources that I will use also to come to bring bear onto getting a HELOC or a HE loan and paying it off quickly. So with that in mind, I'll go ahead and share my screen. We look at the business budget that I have. And so I have currently have four business credit cards, and not all of them are reporting to a credit agency. So I need to go back and look at that. In looking at each one of the statements, you're going to have a billing cycle, which is a period of time it runs, the number of days in that cycle that they'll calculate interest, the payment due date, and also the balance. My current balance on all the cards are about 14,500. You see that my minimum payment and the minimum payment for the month about a little over 500 for all four of them. These are the four interest rates, and then I did an average interest rate. These are the credit card limits, and these are the previous credit card limits. They're all the same, but I wanted to show you this one right here. In my search for a HELOC, HE loan, all-in-one loan, one of the lenders recently sent me a letter and indicated that, sorry, Mr. Green, we had to drop your limit because. Okay, here we go. Willie Green III. After a careful review, we reduced the corporate credit line on this account to 5,400 as of the date on this letter. For this reason, number of inquiries on your credit file. This is supposedly a democratic society, free market society. You should be able to shop. But here it appears that they seem to penalize me for shopping. The Dodd-Frank Act allows you, I think, to shop within a 45-day window, multiple lenders. And so far, I've gotten maybe 15 to 20 within a 45-day period. I initially started December the 7th, I think I mentioned in the previous videos. They also said utilization of your credit is too high. Now, with the utilization of your credit, if you also, one of the things I want to mention, if you become a authorized user on someone else's card, if their utilization goes up, that's also counted in your utilization. And talking to the vendors, I may have one or two options. One is to come off of the vendor and take off some of the history and the utilization, or two, just remove it and temporarily and then come back. So it can happen is according to what are the things that you like to do. Um, in general, from just looking at my credit cards that I have on the business side, one of the main things that I wanted to show is that here I'm paying about $506 on these four credit cards. If I get the HELOC or the all-in-one loan, what I initially plan to do is to put all of them inside of the HELOC, pay down the HELOC, and this would help with my average daily balance inside of the HELOC in general. One of the things, again, going back to please, if you have an opportunity, look at an all-in-one mortgage or AI, which is the ability to replace your existing mortgage. And then you have a mortgage where you can place your check in, the deposits in. So when I receive deposits from my tenants for the properties that I have, I plan to put that money in, my escrow money in, my insurance money, my taxes, and money from the credit cards. I looked at my escrow, and the escrow is the insurance and the taxes. So I was paying about 900 every month. So in general, if I would have been maintaining that versus the bank, and if I go 30 years on my mortgage, then I would approximately be paying have $308,000 that I could have used on a HELOC or a HE loan to bring down my debt even faster and sooner. Okay, in general, and let me stop sharing. Okay, well, thank you and welcome back. So that's one of the things that I want to do is I want to take the equity that I have in my business, my properties, find individuals that are looking to get some assistance. So if you have some high interest credit cards, I like to try to use the HELOC strategy on that or the all-in-one strategy. I really want to educate the community and help the community. So that's what I've been trying to do on my journey in terms of refinancing my three properties. As I said before, I had four. I lost one foreclosure, so I have the three, and just going through this process of refinancing, having the community see what it's about, looking at the different options, because the all-in-one strategy, although some say it's been here since 2000, is practiced in other countries, there are certain communities and individuals that really don't know about it. To get the all-in-one, I think some companies require a minimum score of 620, a low utilization on your credit report. So that's some of the things that I'm looking at. On the consumer side, it shows me as having a high credit score of 750 to 770. But when they pull that mortgage score of you that you never see or you don't really know about, is much lower. So I've had a much lower mortgage score compared to my consumer score. So that's been a challenge with finding an all-in-one strategy. So I may have to just settle on using a HELOC in general. Well, thank you very much for joining me today, joining this political economist. I think I'm the only political economist that are providing financial literacy to the community. So if you know anyone, share the channel, hopefully to continue to grow from my perspective. I'm not a CPA, I'm not a financial advisor. I am an entrepreneur and just a professional political scientist that are just trying to get out information to the community. So I appreciate everyone, the well wishes, the blessing, those that are interested in joining me as clients. I'm really looking forward to that and really looking to help other individuals improve their credit. So if you have any credit questions or see how I can use my credit to leverage your credit, please just give me a call or hit subscribe or shoot me an email. Okay. Thank you very much, everybody. I really appreciate you stopping by and giving me your time. Bye-bye.